Good morning, and welcome to episode 63 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 9th, 2022. A lot of battles going on this past week around the world. In Ottawa and elsewhere, individual citizens are battling for their right to make their own decisions when it comes to mask mandates and things of this nature. In Beijing, the world's athletes are gathered to battle for Olympic gold, although very few are in attendance and very few are watching to date, a few days into the Olympic Games. In the Crimean Peninsula, the US and Russia are both battling for strength in the eyes of the rest of the world. And in the financial markets, stocks, bonds, precious metals, cryptos are all battling for investor dollars, although there's no dominant force there and no clear direction as to where investors are going to go going forward. Let's take a look at the prices over the past week. Gold is up 1.3% from a week ago at $1,827 per ounce from $1,803 last week. Silver is up 1.9% to $23.27 versus $22.83 last week. Platinum is down 0.25%, $3 to $1,042 per ounce from $1,045. And palladium is down 5%, continues to be our most volatile precious metal, down to $2,346 an ounce versus $2,473. With silver slightly outpacing gold, we see the gold-silver ratio, the number of ounces of silver it takes to buy 1 ounce of gold, dropping to 78.81 from 79.28. And amidst all of this, the dollar continues to pull back. It was as high as 98 on the US dollar index. 95 is bear territory. It's approaching that again. It's at 95.47 this morning versus 95.96 last week. Let's face it, the dollar is not strong. It is stronger than other major currency competitors. I'd like to draw everybody's attention. If you didn't get it, you should get a copy of last week's monthly information line newsletter. There's a great article in there from Adrian Day where he talks about precious metals and how, although they were down slightly last year, I think 3.5% for gold, they showed very strongly, considering they've been in a consolidation period following their rise that began in May of 2019. And if you step back and you look at the full picture, not the short-term forest through the trees type thing, you'll see that gold is actually performing very well, as we expect it should, with such an astronomical increase in the money supply. And that continues. It has continued over time. It's why gold will continue, as measured in fiat currency, to rise over time. The other interesting point that Adrian raises is how well gold does in an interest rate raising environment. It sells off prior. We've seen that from the beginning of the year through now. But once the interest rate increases begin, we see that gold performs well for the last 4 interest rate increasing cycles. As always, we like you to go ahead and subscribe to us and like us on YouTube. Send us your comments and questions, good, bad, or indifferent. I take them all, and I'd love to share them on the air. In addition, go ahead and subscribe to our social media platforms at Asset Strategies International. And don't ever forget that getting rich starts with keeping what's yours.